Are you on the side of the table of the employees that work for you and your investors and your boards on the other side of the table? Are you on the investor side of the table, looking at the company, making rational decisions that's best for them? The trickiest part of being a CEO, you've got to find a way to understand the perspective of the investors, because to some degree, you're managing them. They're not running your business, and they're very dependent on you. It's empathy, really. You got to understand what they're dealing with, because they can sometimes make some bottom line decisions that don't feel very human. They're operating in Excel. You're really dealing with humans. So you're the mediator between humanity and cold-hearted business.
Hey, everybody. Welcome to the Practical Founders Podcast, where every week we hear an amazing story from a serious founder who built a valuable software company and did it without big funding. I'm your host, Greg Head, and this week my guest is Steve Oriola, the CEO of Unbounce, which now includes Insightly, two great products of sales and marketing, CRM, and landing page management, been around for years in the MarTech space, now owned by private equity. And Steve is the guy that's running this combined company with 200-ish employees and taking it through an exciting transition at scale in the AI age in sales and marketing. So he's one of those CEOs that runs businesses that founders create and eventually sell to private equity. He's done it multiple times. He's in the middle of an exciting adventure right now. So we talk about what he's doing, how he's innovating at scale, how he works with the original founders of these companies who are still involved, and what's it like to have investors, private equity investors in particular, that are owning the business and involved in part of how you manage the whole thing, why it's different at scale than when you started it up, and what it would be like for founders someday to be part of that if they sell their companies. It's a great discussion with Steve. Welcome to the Practical Founders Podcast, Steve. Good to see you.
Great. Yeah, good to see you too, and thanks for having me.
And where are you today?
I'm in Brooklyn, New York.
A lot.
Yeah, I'm in Brooklyn, New York in my home.
Excellent. And you've been moving around. You've done a lot of things in your career. These days, you're the CEO of Unbounce, which has just included the Insightly CRM product in there. You're running that business, private equity owned. So
Yes.
we have a lot to talk about, what you're doing in that business and all the other topics that are interesting to practical founders here. You've been doing the sales and marketing software game for a long time, and
Yes.
I did too. And you actually ran a business that I ran 25 years ago, was part of the
Yes.
initial team way back in the 90s, and
Mhm.
we sold it off, and I did that game, and
Yeah.
it kept going, and you ran ACT,
Yes.
somewhere in the mid-teens there.
Yep.
So we have a little bit of a relation. I'm sure we know some people in common, Xavier and Clifford and Joe
Yep.
Greenspan and other people that
Yeah, I know
part
Joe
of the
well. Joe works for me. Yeah.
awesome. Great. So let's start. What's going on at Unbounce these days, Steve?
Sure. Yeah, I joined Unbounce in January of 24. We acquired Insightly in July of 2024. So, did a lot of post-merger integration work to bring the businesses together and the teams. And we are in certainly the marketing space and the selling category. So we have a CRM that is a sales-oriented CRM, as most are. And we also have a landing page solution that is, more than that. It's also a conversion rate optimization solution.
Yeah.
And, really it's for high volume transactional use cases seem to gravitate
Yeah.
to the platform. And we do a lot of work with agencies in that part of the business. Our CRM business is, well adopted by a variety of businesses. We tend to do quite well in industries and categories where the delivery and the selling is very closely linked. And we have a project management solution that is, very well integrated and gets you started based on the sale process you just went through.
Right.
And so we have sort of a behavioral lane there that we do quite well in. And the solutions have been brought together. what's happening now is everyone knows the way that software is built has changed pretty quickly and is still changing and coalescing around a much new approach. And we're right there as well, and right on the cusp of commercializing a few things
Oh,
that
fun.
the market will know about here shortly,
Okay.
literally within weeks. And we're very excited about how software is built now. It certainly has accelerated. So, developers everywhere are seeing higher velocity in writing code. That doesn't necessarily translate into higher velocity of commercializing new things. There's much more to it than writing the code, but we are seeing lots of acceleration where we formerly had seen bottlenecks.
Yeah.
And I think everyone's going through this.
Yeah.
At the same time, our products are becoming agentic, and we have lots of things on the horizon because of this. We're pretty happy about what's going on in the market with regards to how people build software, and we have a strategy to take full advantage of that in the market.
Yeah, so Unbounce is that famous, one of the early landing page builders, right? And now
Yes.
and very
Uh-huh.
sophisticated A/B testing and all that high
Yep.
transaction volume thing,
Yep.
and you're not the founder of that, right? It's been,
I'm not.
acquired,
I'm not.
and, I don't know how long ago it was acquired by private equity,
Yep.
but, you're not the founder, you're running it these
I,
days,
I'm,
and
I'm not the founder, but the founders are very involved.
oh, fun.
Former founder CEO is chairman on our board. And then I've got two other founders, one of them founding CTO or board observers, and I provide lots of access into the business for them because they have great ideas. And, their personal brands are wrapped up in it. So they have lots of interest. So still very founder involved and, have an investor who is very founder friendly. So finding them to be really helpful.
Okay, and so Unbounce was acquired, I don't know if it was acquired multiple times, but Crest Rock Partners owns
Yep.
it, right?
Yes.
And
Yep.
so, the classic thing, the founder grows the business and the founders sell it, and they sell most of it, but not all of it. They're still owners in the business. They
Yep.
roll some of their equity,
Yep.
and eventually, a new CEO comes in to run this bigger, more complicated thing, and you're that guy these
Yes.
days, right?
Yeah. Yes. Yep.
And from
Uh,
what you've described, you're also the guy that's not just there to squeeze it and be the frustrating person on the other side of the transaction. You're
yeah.
innovating,
Yeah.
leveraging the founders, and moving this bigger ship forward, which is a totally different game than starting these crazy startups.
It is a totally different game than starting them. And, unfortunately, the company has had to get a bit smaller in that
Mhm.
transition process. I think that's happening quite a bit in the market. I think we
Yep.
all know that. Um, and, it's difficult to get smaller, right? Because people think, well, now I'm still here. I have to do more work. What you really need to do is scope down and focus more.
Yeah.
And find the core value, and
Mhm.
that is what we're doing,
Yeah.
and we're finding it, and we're doing some exciting things that we know our customers are gonna be really happy about. But you've got to find that core and find that value. Founders who have gone through rapid growth, that's a different tricky challenge. You have to go to someone and say, hey, we're going to take 30-40% of your job away and give it to someone who's more specialized. Oh, you're hiring over me, or I no longer have
Yeah,
opportunity. Oh,
that's
you
classic
do.
as you grow, right?
You
Yeah,
have
the
an
specialists
opportunity
come
to
in. Yeah.
specialize,
Yes. Uh-huh.
and that will advance your career. And if you have to get a little smaller to find your focus, you have to go to people and say, "No, it doesn't mean you have more work. We are reducing scope of what we're doing, and we need you to scope down a bit too. Yeah, you might be doing more things. We need you to go less deep for a while." And I think everyone's going through that right now. So it's a very
Yeah.
different problem for a founder. I know we're we're here to talk about largely that part of it, but I think they're all you're either a pure play now or you're trying to transition a SaaS business into agentic. So I think everyone's sort of going through that, and that's probably the timely conversation. You know,
Yeah.
is how do
Well,
you do that?
roughly how many people are in the organization right now? In the
Um,
Unbounce, Insightly, and I don't know what else if you've acquired or
yeah,
inherited.
I don't want to be too specific because these things change, and
Okay,
we're around 200.
okay.
Mm,
Yeah, so it's a sizable business. This isn't
mhm.
has levels of management and operations and
All that.
financial controls and
Yep,
all
yep.
that good
And
stuff.
a culture.
Yes, a
So,
culture and
yeah.
maybe a couple cultures that you get to figure out and adapt
Mm,
and combine
yeah.
that
It
Insightly and Unbounce and so forth.
Yeah, no, that really has come together into one culture. So, yeah, gosh, if I had to manage 2, that would be hard. So,
Yes,
so we did after we, bought the company, we all got together and rewrote the values and rearticulated them
there you go.
and found a very happy place.
So, last week when we were scheduled to talk, we were all set up, ready to go, and then you got a call from your private equity owners, I
Mhm.
guess you'd say, the investors
Yep.
in the business that said, "Hey, we need to jump on a call," and so we rescheduled. So that's part of your game as the
Oh, yeah.
CEO running this business. You have a board and
Yeah,
investors
yeah.
and founders running around and all of this. Yeah.
And they have limited partners, and the
Mhm.
limited partners have bosses too. Everyone has a boss.
Yes.
So yeah, yeah, that happens from time to time. We're making a lot of changes, and I stay very aligned with investors, and I think that might be one of the areas that because I've done advising to groups and things like that. I've done a lot of startup advising in my
Mhm.
career, and really, it's challenging, right? Because you take money, and which side of the table are you on, right?
Mhm.
Are you on the side of the table of the employees that work for you, right? And your investors and your boards on the other side of the table? Are you on the investor side of the table, looking at the company, making rational decisions that's best for them? That's the trickiest part of being a CEO. And I think if you're a founder, you're on the team side of the table.
Yeah.
Um, and you've got to find a way to understand the perspective of the investors because to some degree you're managing them, right? They're not running your business, and they're very dependent on you. Um, so you've really got to find a way to, and it's empathy, really. You got to understand what they're dealing with
Yeah.
because they can sometimes make some bottom line decisions that don't feel very human, right?
Yeah. Mhm.
And they're operating in, Excel and, you're really dealing with humans. So you're sort of the mediator between humanity and
A
just
spreadsheet.
cold-hearted business,
Yeah,
right?
yeah, yeah.
Not
And so
not that all
how
not that all the investors are just like that, but
yeah,
that is often where you stand. Yeah.
right. And, I played the game,
Yep.
as with venture investors, and you were part of a public company, the Constant Contact adventure way back when, and
Yep. Yep.
that, grew from small to big, went
Yeah.
through all of that, and do you view it as, uh, a more stakeholders at the table? I don't wanna overuse that word, but, like,
Mm.
you've got employees and customers,
Mhm.
right? And you and founders as owners,
Yep.
and now investors in the game and private equity investors, especially majority,
Yep.
they have a bigger say. But are you balancing all of that, or you know, um, sometimes this the investors don't understand the nuance of the business, and sometimes the employees don't understand the nuance of the investors, and
Yep.
you how do you negotiate all that?
I think that, on the employee side, a lot of context and as much transparency as you can, right? And, it's difficult because not everybody understands finance,
Yeah,
and I have to keep that in mind. So kind of keep it straightforward, but you know, I've explained to the whole company what EBITDA means.
yeah. I
Right?
remember when I learned to spell that right
Yeah.
after all the years in software, right?
Yeah.
Going top line growth. What is EBITDA? Right, all that. Yeah.
Yeah, and what is the top line and what is ARR versus one times revenue? So have discussed all of that, certainly with the company. Um, and then try to frame decisions in the context of what's best for the business
Yeah.
and what is viable in the market, right?
Mhm.
So try to frame all those decisions mostly in terms of what's best for the business.
Mhm.
And, you know, try to resist, decisions that aren't best for the business. So, which is a difficult thing to do because sometimes decisions are best for a particular person or a group of
Right.
people that work for you, but
Hmm.
not so good for the business. And that's when it gets really difficult. And you have to provide a lot of context and you have to say to people, we cannot take care of people if we don't take care of the company, right?
Right.
We're all in this boat cruising through the ocean.
Right.
And the most important thing is the boat that we're in and the
Yeah.
company. So
Now, did Unbounce have venture funding, or was it bootstrapped, or before the acquisition by private equity?
yeah,
Press-
Did have venture funding,
Okay.
and they were all bought out when PE
Yeah.
bought the company, when Crestmark bought the company. So
So they knew there was investors that had an interest and a say, but now it's different version of that, right?
it is.
It's
PE
a
is
little
very different
different
than
style.
PE is different than venture. The rules are not all hard and fast, but for the most part, they're not, they're not collaborating with other investors. They're not trying to get someone
Ah,
else to lead the next round because I, as an
yes.
investor, want to be at 20%,
Yeah.
Um, none of that's going on. I did find when I was in that world that VC partners and people on your board were all very collegial, it was impressive, right? They all work together well.
Lots of clapping. Yeah.
I can't imagine PE firms, the way they operate, being quite so collegial, right? They are mostly designed to be control investors. The lines certainly blur in with different firms, but
Yeah.
I would say for the most part in PE, you're getting a control investor. It's a little bit easier in some respects, but decisions come faster and they can be a little harsher,
Yeah.
right?
Yeah.
Because
That's kind of the sense that founders would say for the company, right? They get, they've sold a majority of their company. Somebody has a
Mhm.
lot of say in their business and a lot
Yeah.
of opinions about it. And, they come fast, and founders don't like that very much. If they're not used to it. So,
But what you have to keep in mind is the new investors taking a lot of risk,
of
right?
course.
And they bought the company, they own it.
Right.
So you
Yeah.
have to, if you're a founder that stays involved post acquisition by a PE firm, you just need to understand that. Like they
Yeah.
own the company now, it's
Right.
theirs.
Yeah.
And you may still own a chunk of it and you certainly have some say, but they own the company. So
Yeah.
I think
Yeah, and so
it's a
and
different
you're
assessment.
comfortable with that role, and you have rational people, investors with
Yeah.
money,
Oh, yeah.
and,
It
you can agree on a sport you're gonna play for this venture and this timing.
I'm
Yeah,
more comfortable sitting on both sides of the table and than maybe a founder who's CEO for the first time running the business that they started. That leap to, "Hey, I understand your perspective," I think that's a big leap for people.
yeah,
I've been able to do it over years, and I'm very
yeah.
comfortable with it.
This podcast is brought to you by my friends at DevHawk. Every founder I know is trying to move their product roadmap faster with AI, but most admit it isn't moving fast yet. That's why I like DevHawk, an AI software factory from former Practical founder Praveen Ganta. DevHawk plugs you into a full crew of customized AI agents that can handle your whole development job end to end, not just writing code, but requirements, testing, shipping, and software maintenance. Add their AI agents to your org chart and run them yourself, or have the DevHawk team manage the agentic software factory for you. Either way, you get an AI powered dev team that works while you sleep and a roadmap that can move 5 to 10 times faster within a month. Head to devhawk.ai/practical to book a conversation about how DevHawk can help you ship and grow faster. And so you're known as a CEO that could come in and work with private equity and achieve the goals. And, you
I
know,
don't know
uh,
about that.
yeah, well, okay,
I don't
well,
know how
you're
known for
getting
that.
known, right? You're doing it, and you've done
Yeah,
it a long time here. So in a year and a half, you've come into this company and or 2
2.5.
years, I guess, and you've
Yeah,
acquired and,
yeah, two
you
and a
know
half.
2 and a
Quick
half, okay.
yeah,
So
we're
in 2.5 years, you've come
mhm.
into this company, you know, brought all the parties together, assessed this changing world. figured out the best way, aligned everybody as best you can around it, get the right people on the bus and all of that. How would you describe what sport you're playing now with Unbounce? Is this a growth story, an efficient growth story, and
Mhm.
someday sell it, make it bigger and sell it? Is this a turnaround? Is this a platform with acquisitions? Maybe it's all of those things,
I,
but
I,
how would
I
you
would, it's
orient your story?
it's a big transformation to where the growth is happening, right? And it doesn't for me. It doesn't feel like we're late. We're also not early. We have competitors who've charged in this direction faster, but I think the market is getting there. We generally don't sell to real enterprise. I would say we're mid-market down to
Mhm.
small. And we believe that this is happening in mid-market and we want to be there as it happens. I would say up to this point, most of the work around agentic AI has been happening, at the enterprise level
Mhm.
with consultancies building managed services,
Yeah.
right, around agentic because, people want a single, a chokeable throat, I
Yeah.
think it's the
Uh-huh.
saying,
Mhm.
and people still don't have a good sense for how governance works for agents,
Right.
and they're a bit concerned about what agents will do inside of their corporation. So we see these managed services getting stood up, and it makes perfect sense. And we see that coming to the mid market already, and that's what we're headed towards. So,
Well,
sorry, I forget the question. I kind of
yeah, but in the sales and marketing
Mhm.
software game, a lot has
Yeah.
changed. It's not a vertical run your business sticky software. It's this
Mhm.
sales and marketing tools, and the way companies of all sizes sell and market is
Mhm.
changing with AI.
Yes.
AI tools and agentic and
Mhm.
data and all of that. Would you say you're like rebuilding this business for the modern AI and agentic era in sales and marketing for your mid-market customers?
Yes, absolutely.
Okay,
That's
right.
exactly what
So
we're
it's
doing.
not a legacy, pile up the companies. It's not a financial, slowdown. You're an innovator here with this larger
Yeah,
team. Yeah.
in a model that really wasn't sort of crafted for innovation. I mean,
Ah,
private equity's primary thesis is product's fine, we can come
yes.
in
Yeah.
and fix go to market, right?
Yeah.
And and we'll make those changes, fix go to market, it'll accelerate, we'll get a
Yeah.
valuation increase, we'll sell the company in 3 to 5 years.
Right.
I think many private equity firms right now, especially in SaaS, are dealing with, okay, we've actually got to change the business and redesign the business in a lot of ways. And yeah, I think that's just the reality today, and we're doing that.
Yeah. And was that something you said that you had to lead with your board, your investors and the founders? The world is changing. If we want to grow, we need to change. And there's some investment or it's, those normal kinds of conversations. Or was this the initial purpose of this? We're going to get in and, you know,
Well, when I
ride the new
joined,
wave.
no,
Yeah.
I had a mandate walking in
Okay.
January 24. Agentic AI was not really clear to me at that
Right.
point. Certainly, generative AI was. I mean, I knew what agents were. I understood the concept. I didn't know that it was going to just roll into my business so quickly. So I would say that my investors are pretty smart. And it was a little bit of they're reading a lot and they're coming to me with, hey, we think the world is changing.
Yeah.
And, I'm on the ground making changes thinking, oh, I wish you wouldn't read so much. It's, I'm not feeling it and seeing it today. There was just a couple of months of that. And then I was in a conversation with a client who said, what are you doing about AI? and,
Yeah.
you know, and started a conversation about agentic. And I was like, oh, whoa, okay. So I very quickly pivoted. And this was, more than a year ago, year and a half, maybe. And I immediately got on the same page, and then we started a whole change program, and that's why we're about to hit.
Well, pivoting with 200 employees can be tricky, right? Not
Yeah, oh,
everybody's
yeah,
on board, and there's a lot
right,
of infrastructure, and there's the legacy and the new, and the
right,
ex- the I've been through this, the big machine, right? That runs
yep,
the business, that's getting profitable and tighter, and the innovation over on the side.
yeah,
Did
yeah.
you did was it a did you move the whole ship quickly, or Did you have an innovation skunkwork start this game and bring it back to the machine? How did you do that?
Uh, yeah, we have, well, the Skunk Works, we have twice a year hackathons, and we have commercialized, I think, 3 things out of
Oh,
hackathons.
fun.
So definitely, definitely do that. No, we designed a change management program,
Okay.
and, and, it had to do with articulating, where we're headed, articulating a vision, convincing people that we could
Mhm.
accelerate. And as it became clear that people were seeing that kind of acceleration in the market, we really made the case with folks like, hey, we could do all of these things, because you get in these software companies that are years and years old,
Yes, yes.
there's a lot of code debt.
Yeah.
I would argue that a new code base is laden with debt in 3 or 4 years, right?
Mhm.
That's been my experience. And you're
Yeah.
refactoring in a major way every 5 years. And the world has changed radically, right? And I think that, that sort of thinking is gone, right? I think that I think that code will be regenerating itself, right? And refactoring itself all the time, right? So I think that 5-year horizon in SaaS is no more. So that's a pretty exciting thing. And once you realize that and you realize the cost of actually writing the code has now gone to token costs, which are not
Yeah. Uh-huh.
trivial,
Mhm.
but, what's I felt like always kept engineering from failing fast when, you're telling the whole rest of the business, let's work iteratively, let's
Mhm.
fail fast, retro, go back at it. Engineering never quite got there. I thought Scrum would be that because, okay, now we're working iteratively. But when you're dealing with a very high cost of writing the code, you want to be very careful.
Yes.
And you wanna make sure that you don't architect yourself into a corner, so you end up in conversations about, "Well, what's this gonna be doing in year 3 and 4?" And
Mhm.
then all of a sudden you're expanding scope, and you're having more meetings, and nobody's writing code, mind you. And then all of a sudden it's 3 or 4 months out, and you're like, "Hey, how come we haven't started?" "Well, we're not done yet. We gotta, Now, I'm saying to people, "Just write the code." You know? Do it wrong,
Yeah.
all we're gonna have to do is go back and reprompt and run it again. That's
Did
an
Was there
exa
a rewrite process in there?
that's an exaggeration, but that is the world we're getting into where
Yeah.
people can move much more quickly, people can move and make mistakes and recover quickly. The cost of writing the code is what's going way down. So it
Yeah.
just changes the dynamic considerably in engineering. But also in the rest of the company, which is probably a separate podcast, is how the rest of the company changes, to keep pace with that.
Well, I'll ask one question about that. Who is changing faster? Your engineers, many of whom have been doing this a long time in the kind of businesses
Mm.
you've combined and acquired,
Engineers.
or the rest of the business? Yeah.
Engineers.
Oh,
Yeah.
okay, great.
No, the engineers. And the rest of the business is moving along too. I mean, I've got just about every manager in the company knows how to write an agent, you know?
Yeah.
So the company's moving very quickly, but it's really an engineering where just all the value is being captured, honestly, right now,
Yeah.
just in the world. Now, there are other places. I think AI has made its way into research, academia, et cetera. But in
Mhm.
the business that we're in, it's the engineers that have really seen all the value so far.
Yeah. So, where do you see the business shifting now that
Mhm.
software is moving faster? Your software is moving faster. It's going
Mhm.
to do more things for you in the agentic
Sure.
world. It'll start
Yep.
running tests and
Yep.
telling you the answer, presumably for your
Yep.
landing pages and maybe your advertising or with that whole ecosystem
Yeah.
there. But
No, I get the question. This is not news to anyone, but I think the path to success now, you need services. I think you need professional services and potentially bespoke engagements with your clients where you're building agentic solutions. And, I think repeatable IP can emerge from those engagements. But that professional service muscle needs to then turn into, in all likelihood, a managed service, right? Because I
Mhm,
think a lot of clients are going to want people to manage this.
mhm.
Governance is going to become really important. And the term I'm hearing now is service as software, right?
Right.
So software as a service becomes service as software,
Yeah.
and that is that's our focus. We're marching towards that vision.
So instead of I need landing pages and the marketer could use Unbounce to create a bunch of
Mhm,
landing pages and then have a test framework for which one converts the best and do the sophisticated math and help with that. But that was the old clicking through and creating templates and all of that kind of thing.
mhm,
You're seeing your platform have agentic capabilities
mhm,
and some people on your team
mhm,
that help. I don't know if they're forward deployed engineers, but managed
mhm.
service, some human in the loop that helps
Yep,
do a lot more faster
yep.
with all of this.
Yeah, the forward deployed engineering is certainly something we're buying into, as a way to leave an engagement with repeatable IP. I think that's pretty important. And we're not doing it to be, a systems integrator. We're doing
Yeah.
it to really discover repeatable IP, but also, to deliver agentic solutions that use our assets, right? So
Yes.
we're not just out there building, building
Generic
bespoke things.
agents. Yeah. Right.
Yeah,
Yeah.
we're not out there. That's not really where we're headed.
Wow. Very exciting.
Yep.
So that's very forward thinking. And a
Mhm.
lot of people would not think they're private equity investors. We hear about the headlines and
Yeah.
we've heard the stories. The big companies go to sleep and they get loaded with debt
Yeah.
and things slow down and prices go up and there's
Yep.
usual complaints here.
Mhm.
Seems like you're in a different style or I don't know. Is there a particular approach that CrestRock Partners has, or is it unique to what you're doing there? Or, it
No,
sounds like a more innovative, investor, would you say?
I don't know. I think necessity is the mother of invention. I think that, if you're a private equity partner, grinding on the SaaS business to improve go to market, you're missing the boat. So
Yeah.
my guess is what I'm going through inside of a private equity context is not unique.
Okay.
Even though private equity is not known for this, it's not really what they're in the business for. They have these assets, and if they're not making this transition, those assets are losing value,
Right.
right? So
Yeah.
the market has changed.
Yeah, and for founders, it's the same equation. If they're not
Yeah.
shifting, they're
Yeah.
losing value in their own company. Does
Yep.
that mean you're a savvy about finances, a savvy about the whole business and investment and change management and the management game? But
Mhm.
does this mean you're more of a market and product innovator kind of CEO, or not all financial CEOs
I wouldn't say
can think through complexities of
I
sophisticated markets. Yeah.
I don't know. I'm not a sophisticated financial I mean, I have a degree in
Okay.
it, but I would not hire me to be the CFO of the company. Let's just say that. I'm financially my financial acumen is what it needs to be to run the company. I would say I'm more market and product than,
Yeah.
finance.
Right, and going through, what will look like a pretty big shift in a couple of years, looking back, would you say, for all this business?
Um, the shifts now,
Yeah,
not
yeah,
a couple of years.
yeah,
I think in a couple of years, I will look back on 2026 as, a very big transition for the business. Yeah.
yeah, very exciting.
Yep.
So, you're running this business and innovating it, taking it into the modern, era and helping to
Mhm.
build that right on the frontier, with all of that. Let's talk about what it's like to, run a business in private equity and the differences that founders have, bootstrap founders, lightly funded founders that, on the other side that have so much control and so forth. What can you say about what the sport is that you're playing that's different than what founders do?
Interesting.
Because they have their own sport, and but the sport changes when they sell their company to private equity. What should they be thinking about as they're going,
I
like
think,
the Unbounce founders who sold their company? Yeah.
yeah, I think that risk tolerance is different in private equity for sure. Although that is changing right now. I think people are realizing they got to take some risks, but execution risk is something that, PE firms usually are not super comfortable with. But if you founded a company and you found some product market fit and there's potential, you're just in a very different place,
Hmm.
right? You're in the go, go, go phase, and you're taking risks all the time, right?
Yeah.
And you're failing fast because you're not over planning. You don't have the resources to over plan. You're just going. And your success is based on, hitting on some of those, right? In private equity, it's difficult to just throw things at the wall, right? I mean, these guys want to hear a business case. What's the return? How will we know it's working? And you just got to manage that fear of execution risk, right? I wouldn't call it fear. They're pretty smart folks. But you just need to know that the environment of just trying things all the time is a little more difficult to manage. It's not impossible. We are trying a lot of things. And I just had a conversation this morning with them, my investment firm, about just that, right? We have one in this group of things that we're building. There was one concept where someone said, we could just build an MCP shirt of that and go to market with it. And, we haven't really thought through all of the commercial details. But I said this morning, it's like, we might throw it out there and we may find out very quickly what the value is. And how are you guys with that? And because, and the question was, well, how much of an investment is it to build it? And I said, not that much. So, and that is one of the other benefits is the investment to build things to get them commercialized is lower, right?
Yeah.
And I'm seeing more of the cost in all the go-to-market infrastructure to do that.
Yeah. And so your private equity investors, the realities of the modern game are more open to small experiments, right? And
Yeah.
bigger shifts. And you're, in this conversation. Was there
Well,
ever go ahead.
while maintaining top line and EBITDA
Okay.
margins. So
Okay, so that's a more
all of that.
complicated puzzle. I've played a version of that puzzle before, right? It's a bigger company, and there's a lot of
It is.
things. It's a complicated puzzle to do all of that here. And would you say that they had a version of their playbook or their expectation? We hear about the PE playbooks, right? That come
Mhm,
down on high and so forth.
mhm.
Or is there, flexibility in this discussion about the puzzle and
Oh, very
the
lot
guardrails?
well,
Yeah.
no, lots of flexibility. In fact, when I joined, the PE playbook hadn't worked, right?
For this investment, right?
That's why I was hired. Yeah.
Yeah. Yeah.
So, no, we've been in this state of giving me, latitude to make the changes necessary to fix the company, to
Yeah.
make that playbook work. And through that, we realized, hey, we might have to throw out the playbook
Yeah.
because the world has changed, not just this business. And that was, once we all aligned on that, that freed us up to think about the kinds of things we're doing now.
Yeah.
Yeah.
And is that discussion at a board level, let's say, structured and more formal, or is this something you're calling the founder, the Unbounce founder and the investors and, you know, uh,
Yeah.
going through this continually?
Yeah, we have 5 to 6 board meetings a year.
Hmm.
Uh, we don't wait until board meetings to have these
Yeah.
conversations. So,
Right.
and we're
How
having
is
these
it?
conversations weekly, actually.
Yeah. How is it working with the original founders and some of the team of Unbounce here?
Oh, very well.
You
There's 3 of
you
them.
have a direct
Yep.
line to them and say, "What
Yep.
do you think?" And
Yeah,
do
yeah.
we hear the other side. We have other ideas that they're throwing at you,
Yep.
right? And all of that. How does that go?
Very well. So the company is headquartered in Vancouver, right?
Yeah.
And that is the one office we have. I'm in New York, but I'm there often. And 2 of the founders that are board observers are there, and I meet with them. And they're very engaged actually
Mhm.
right now because of all the product
Oh,
trends
sure.
going on. And
Yes.
it's, founding CTO, founding head of product. And then the founding CEO is on the board. So yeah, high engagement. They have a lot of input and we welcome it.
Yeah. And you have a management team, I guess, C-levels probably across the normal food groups?
I do.
Yeah.
Yes. Yep.
And when you acquired Insightly, which was not a tiny company, right? Was
Yep.
there an overlap, right? Or an integration of the management team? It's one management team and multi-product, right?
Yes.
Different food.
Yep.
Yes.
We did that. The management team changed after the acquisition. and some of the management team after the acquisition ended up being around 50-50
Yeah.
for the two
Okay.
companies that were brought together.
So a blended kind of approach.
Yep.
Right.
Yep. Now there's some real talent that I just couldn't stay away from. So,
Yeah, how fun. And was the Insightly acquisition, right? We hear about private equity platforms
mhm,
and
mhm,
acquiring tuck-ins
mhm.
and all of that. Was that your idea or was that the investment team's idea? Hey, there's some companies we could acquire. What do you think? How did
Yeah,
that
yeah,
discussion? Yeah,
the
yeah.
way it works is, you know, investment bankers, work with someone who wants to sell their company, they put a presentation together, and then they send it out. Everybody gets that. Call it
Yes.
the book. So it was one of those. Generally, private equity is not knocking on doors asking people to sell their company. So
Right.
what my private equity firm has is a strategic lens that we've aligned on. And when they see things that are in that area,
Yeah.
they send it to me right away.
Yeah. Yeah.
And they've gotten excited about some things that I thought would not be good. I've gotten excited about things that they've said probably not going to be able to do that. So that's it. That's the process. And there has been a little bit of me saying, "Hey, maybe we should knock on that door." uh,
Oh, okay. Yeah.
uh, but, for the most part, it's a game of, what's available on the market that would make sense, that would fill a gap, that would accelerate rather than us going and filling that gap ourselves.
So how many of those books fit the lens maybe every month or quarter? Because we hear the other side,
Mhm.
founders 1 to 10 million in ARR, they're getting people every day saying, "Hey, you wanna sell your company or can we invest?" and so forth. But then
Yep.
there's the M&A side, which not everybody does
Mhm.
the M&A process and getting the
Mhm.
book and the bankers and things like
Yep.
that. But you're on the other side of that. How many things fit your lens that are worth examining every month? Do you get a few or 1 or
Every month, maybe
Yeah.
one,
Yeah.
maybe not.
Yeah. Okay.
They're not flooding me with things because they know what we need too. But I would say just a couple in the last 6 months,
Yeah.
out of, a few dozen
Okay.
things.
And
But
when something is interesting and you say, okay, we'll start to play this game and
Mhm.
examine it and maybe make a bid, and there might be, how much would this we need to spend to acquire this asset? Does that come from the cap table of the company, or is that new funding that, comes in? Like, yeah,
Um,
who pays? Does mom and dad pay for this, or
yeah,
yeah,
it's kinda every permutation you could imagine with all the
okay,
variables available.
yes,
Hey, take equity or take cash, take some cash, but we need you around for a couple of years. We're gonna hold back the rest.
yeah,
All of those things, and it depends on what the asset is that you're buying, because sometimes you're buying the asset, but you're really excited about the team,
ah,
right? And then it's a different offer, right? Because you got to
right,
keep, you know, or or you know, or you're not terribly excited about the team,
yeah,
and you're excited about the asset. It's a different offer. So it just all depends. I think, as many variables as there are, there's an exponential number of ways to do this.
right. When you're looking at a business with the help of investors and your own team. How do you think about the founders or who are on the other side? Are you imagining there's this crazy person who got this thing going, got it through product market fit? Kind of makes sense for us. We could probably make a deal that made sense for everybody. But is the founder a valuable member of the team, or
Yeah, that's a
sometimes,
great
or
question.
yeah,
You, you
should they expect to be a valuable member of the team, or not fit in
when
very quickly, or how? Yeah,
the
what's
way you think and behave to found a company, you have to be a little crazy, right? So you have to sort of, what do they call it? The zone of reality or whatever.
yes,
I I read the Steve Jobs book years
yes,
ago,
right, yeah,
something like that. You have to be like that, and you're not going to start a business and behave the way that I behave every day, which is I'm calculating things all the time. I'm doing return analysis. I have a level of cynicism that is, appropriate for the business or what I do. You can't found companies with that mentality. You just can't. I've been close to people who founded companies. I've not done it. And I'm just in awe when it works. Right. And because it is kind of crazy. And it's not completely crazy. I mean, certainly people have found companies that are very disciplined. And, you've just got to sort of make a decision because the founder energy is really helpful. Like the founders that are leaning in right now that haven't worked in the business in years have their energy is just, there's something inside of them
Hmm.
that others don't always have. So I've always found that I want the founder, but you really have to think long and hard about how happy they'll be, right?
Right.
With the constraints of a larger organization, with someone like me who's operationally been in every part of these businesses, always saying, well, have you thought about it? Have you thought about it? Have you thought about it? And there's a whole company that has to get on board with this and aligned. And we have a process for that. And we run these big, broad, release management
Hmm.
programs. And
Yeah.
and a founder looks at that and they go, yeah, I don't want to work in that
That's no
place.
fun. Yeah.
That's no fun.
Yeah.
So if there's a play for the founder and you want them in it, you just have to, be realistic and try to lock them up for some period of time where you can get the value because they're going to want to do it again. And you just put a bunch of money in their pocket. So,
Yeah.
um,
And what should founders expect out of this? That it's a totally different game. They're probably not used to, especially if they're coming in as a small piece of a bigger company. I've done that a few times. It's
I,
quite a surprise, quite a shock to the system.
I would say it depends on your, age, career arc, what you want. I would say to founders, if you can go along and work inside of a bigger, more structured organization for 2 years, the next time you found and get something to
Yeah,
scale,
been there. Yeah.
you may hang in there longer. You may be able to scale it more because you might learn some things in the next 2 years. That would be my pitch if I wanted the founder. I would
Right.
acknowledge, hey, you're going to do this again. I know, but boy, I can teach you a lot in the next 2 years.
Yeah,
So,
I've been through that into selling companies into big companies. And I
yep.
think I lasted more than the other crazy founders who lasted 5 seconds. But we know who we're talking about here. And I
Don't.
kept going.
By the
Yeah.
way, don't denigrate the crazy man.
No, that's what got it going. It was
You
magic.
need it.
Yeah,
Yeah.
but it didn't last in the system. The sport was
Yep.
completely different. And, both sides had a story about each other that wasn't positive during
Yeah.
that. So I was a
Yeah.
transition person, but eventually I came back to the startup game and so forth. What
Yep.
about, Steve, what about the founder that's built a $10 million business that could look like a platform
Yeah.
for or growth equity, private equity, where they could grow it to 30 and start buying other things and tack it in there? Is that founder likely to succeed as the CEO of that platform business? Or because they're not coming in as a smaller piece in a bigger system, they're still run the system. But, you know,
Oh, just scale.
yeah, just the
Scale
scale and
itself.
having investors and playing
Yeah,
that sport. Yeah.
absolutely. No, I mean, look, founders learn how to be CEOs of big companies. Like,
Yes.
what do you know, how else how do you get there?
How else do you
Well,
get there? That's right. I
and
guess
and
so.
if you brought it to 10 and then you brought it to 30, my guess is you're bringing in sophisticated investors at some point, and then they're bringing in coaching to get you
Yeah.
there, right?
Yeah.
Like, especially in venture, and I see a bit in private equity as well. They want to keep the founder as the
Yeah.
CEO, right? They want that person to become that CEO who can run the company. And I think when you see that work, I think that's probably the best outcomes, right? I mean, Facebook, the
Right, all
CEO
these
of
folks have
Facebook
done
is
it. Steve Jobs and others have, their
uh,
own crazy ways.
yeah,
His own distortion field, that was what it was called back
yep,
then, right?
yep,
Bill Gates and the rest figured out how to run companies in
yep.
their own quirky ways, and, it seemed to work, and that founder mode, is a thing out
If
there for better
if
or for
if
worse.
you
Yeah.
want, if you want to do that, you're just gonna have to learn things that you know, learn how to do things that you may not find appealing. That's all. And if you're okay with that, yeah, that honestly, investments that translate into founder-led CEO scaling the business, I think that's a home run for
Yeah.
investors.
What is it about what you're doing these days that you love? I love the puzzle of the business and this as it
Yeah,
changes with markets and the scale and so forth and redefining everything. There's
I,
just a
I,
magical
I
puzzle to it
yeah,
all. What
I,
what turns you on?
What turns me on is I'm witnessing probably the third major transformation in this business in my career. And, right in the middle of it, that's really that's what I'm enjoying. And I feel like it's, there's a lot of asymmetric opportunities, to change your business and compete more effectively. And I almost feel like agentic AI is like, you know, I don't want to say it. Never mind. It's a bad analogy.
Great. Would you say to founders, and maybe in your own experience, that investor CEO fit the chemistry and the way of thinking about things has to match? There's different kinds of investors and different kinds of founders. And
Depends,
just, yeah,
if investors are making money, they'll put up with a lot. So, outcomes really matter. So if you're a founder CEO who's not really becoming a quote CEO as the investor sees it, but you've hit all your targets and you're making money and the value of the business is going up, whatever works, right?
yeah,
And it depends on the investor as well. Some
yeah,
aren't as dialed into that. I've encountered VC firms that are, that have coaching and immediately
yeah,
get a program and things like that. So it just depends on a
yeah,
lot.
great. Well, Steve, what advice do you have for founders out there who are building valuable companies?
Mhm.
And some of them imagine I could make this profitable and fewer people and fun, and I could do this for a long time. We're builders, so they like to build. There's
Yep.
Jason Fried building away with Basecamp
Mhm.
after all these years. That's
Yep.
one style of doing it. But a lot of founders say, I'm going to build this to 5 or 10 or 20 million
Yep.
and sell it in private equities, generally on the other side, either as a
Yep.
platform or as a tuck in or something like that. But
Sure.
what perspective, there's not one way to do it. And there's
All right.
minority, majority, and tuck-ins and platforms and different
Mhm.
ways of doing it. But what advice would you have for founders who are thinking about someday selling to private equity
For selling to private equity,
or a private equity-backed strategic that wants to acquire them?
I don't think there's any magic, right? You're building value and you'll get judged on, the metrics of the day, right? Today it's ARR and all of the SaaS metrics. That's all changing.
Yeah,
So I don't think there's magic in sort of positioning yourself for PE as opposed to any other liquidity event. I would say though, don't raise money for as long as you can,
yeah,
right? Try to get as far as you can without raising money. Stay as lean as you can. Avoid long-term commitments and be very careful how you manage your equity, right? A lot of early founders is, oh, here's 5%, here's 10%. Careful of that, right? And make sure that, you know, people that you give little chunks to earn it, you know, over time, right? Because you don't want to be lassoed with someone sitting on 5 or 10% that isn't really contributing anymore. So those are kind of the mistakes I've seen in the early stuff, and keep it really simple and find product market fit and resist the temptation to expand and we need other things, right? Try to stay on that for a long time, not too long if you're scaling.
yeah,
Um, but I think back to Constant Contact. I mean, we were just so focused I was there for 10 years. I would say the first 5, I mean, outrageously focused and just grinding on the tiniest little details of that business. And that I would recommend, you know. And that's hard, I think, as a founder, because a lot of times as a founder, you're imagining things all the time.
yeah,
And you have to, if you find product market fit, you have to become an operator very
yeah.
quickly and really grind on the details and stay focused.
Yes.
That's
And some ways you said you did a version of that with the company that you're running right now is leaning up by focusing in, which actually can accelerate things. It's kind of contradictory, but it
Yep.
usually works, right? There's too many distractions that's slowing you down, right, on the
Yep.
margins
Mhm.
as you get bigger, right? The myth of more, as we all know, right?
That's right. The
More
myth.
features, more emails, more people, more salespeople, more
Yeah.
regions, more products. There's
Yep.
usually some trimming that's going on. So stay lean and you know,
Focus.
procrastinate funding, as I say.
And know your
Another way to say it.
customer, talk to them all the time. Very important.
Yeah. Well, it looks like you're having fun there with this adventure, and I
Yep.
Another big shift going on in the software world. So thanks for sharing your insights today, Steve. The Practical Founders Podcast.
Great. Thanks for having me, Greg.
Thank you.
Take care.
Thanks for watching this week's interview on the Practical Founders Podcast. Be sure to like this episode and subscribe to the Practical Founders YouTube channel to keep up with my weekly in-depth interviews with serious software founders who are building valuable software companies without big funding. You can check out my blog, all the podcast episodes, and information about my Practical Founders CEO peer groups at practicalfounders.com, or message me on LinkedIn if you'd like to connect. See you next week.